All right, we got Laura, who's a bookkeeper, Kentucky, Robbie, philanthropic management consultant. I was going to ask how everybody's weather is doing, but I've heard that it's kind of like unseasonably warm everywhere. Raining. Yeah, it's it's been raining a lot. I'm in Florida, so I really can't complain about the weather too much. But it has been quite rainy here the past week. It's been really nice though, so I'm trying to like soak it in. Oh no, not the tornadoes. Let's hope that that you don't have a lot this year. Okay, so let's just give one more minute. So it looks like we got people from all over. That's awesome. Ooh, Nashville. I was just there last year and it was such a fun time. Oregon, that's somewhere I've always wanted to go. Orlando, you're right by me. I'm in Vero Beach, Florida. So we're practically neighbors. Yeah, exactly. Okay. So I think we're probably good to get started. A couple more people may trickle in, but just gonna go through a little bit about me. My name's Elizabeth. I am one of our business advisors here at Collective. I've been with Collective for about 2.5 years, and I am an enrolled agent through the IRS. So that is where my tax professional credentials come from. I have about 10 years of experience working in taxes and finance. And prior to working at Collective, I worked as a power of attorney where I represented my clients, many of whom were small business owners that owed a liability to the IRS. So I negotiated on their behalfs, and that's partially the reason why I'm so passionate about what we do here at Collective, is because I love helping small business owners. And this webinar is going to be focused on S Corps because that is our jam here at Collective. We love our S Corps. And we are here to tell you all about Collective and all about S Corps. So a couple of quick housekeeping items. There will be a Q&A at the end of the presentation. So if you do have questions, just pop them into the Q&A box instead of the chat box, just so that way it's a little bit easier for us to keep track of everything to make sure that we don't miss your questions. Sarah, who is helping me run the webinar, she's going to keep an eye on the chat box. So you may hear her asking you to type it in the Q&A. Also, make sure to stick around to the end of the presentation if you can, because we will be giving away a $50 Amazon gift card to a live attendee, and that will happen towards the end of the webinar. So this is just kind of an overview of what we're going to discuss today. The agenda is basically what business structure is best, LLC versus S Corp, and when is a good time to make that switch. We're going to talk about how to estimate your taxes, how an S Corp can lower your estimated taxes, who can backdate their S Corp, when you can backdate an S Corp, and how backdating an S Corp can lower estimated taxes you've already paid. And then, as we stated at the end, we're going to have that Q&A. So what exactly is Collective? We are the first all-in-one online financial platform designed for self-employed people. We are here to support you as a solo entrepreneur, as a small business owner. It can be pretty overwhelming being on your own. So this is like a I guess, example of your frame of mind when you're self-employed as a solo entrepreneur. Your mind is kind of in 20 different places all at once. You're thinking about, okay, what's the best structure for me? How do I set that up? What accounting software do I need? What are estimated taxes and how do I calculate them? How do I keep track of my books every month? And on top of that, like, should I be paying myself payroll? Am I going to owe a huge tax bill? Am I doing all this right? Am I even in compliance? And then on top of that, how on earth am I supposed to like juggle saving for retirement as well? So there's all these different thoughts that you're having, trying to figure out what to do in what order can be very daunting when you're self-employed. And then things get even more chaotic and stressful when it's time to make a financial decision. Because as it turns out, all of these pesky bubbles that are kind of floating around you when you're self-employed are supposed to be cohesively working together to make your setup more efficient and to make all of these things much, much easier. So that is where Collective can come into play. This is a representation of your money at Collective. And as you can see, it's a lot more calm and organized. We help with all those pesky bubbles from business formation to business taxes. We handle your bookkeeping, we estimate your taxes, and we can support on retirement benefits and planning. So when you're with Collective, you are not on your own. We have your back. So just to get a better idea of what you guys are dealing with right now, we're going to do a quick poll. Let me know what you're struggling with most right now. Is it setting up your LLC, figuring out your taxes, figuring out your structure, your bookkeeping? Just give a couple seconds. Okay. So let's talk about some self-employed federal tax basics. Now, one important structure to talk about is pass-through structure, and that is what an S Corp is. So a pass-through structure is a business that doesn't pay income tax. All of the profits pass through to the owner's tax return. Taxes are paid on the profit after it's passed through, and they are not subject to double taxation. So if you are a sole proprietor, a partner in a partnership, or a managing member of an LLC, whether it is a multi-member or single member, or whether you have an S Corp, these are all examples of pass-through tax structures. And when we mention no double taxation, that is in comparison to a C corporation that is taxed at the business level and then taxed again at the personal level when everything passes through to the owner's tax return. So the good thing about all of these pass-through structures is that they're only taxed one time. Now, there's a couple different types of taxes that self-employed people pay. One of them is income tax, and that's what you think of generally when people are talking about their taxes or their tax bracket. That is where that would apply. So everyone has their own marginal tax rate depending on how you file and how much total household income you have. But most of us fall somewhere between 20% and 37%, depending on our tax bracket for income tax purposes. Now, when you're self-employed, you pay self-employment tax, and that is a flat rate of 15.3%. It goes towards Social Security and Medicare tax. So it's the same thing as FICA tax. If you were ever a W-2 employee, we've all seen the dreaded FICA on our pay stubs. So it's the same thing. But when you are a W-2 employee, half of your FICA taxes are paid by yourself and the other half is paid by your employer. But when you're self-employed, you are having to pay both halves. So it can get really, really expensive. So in this scenario, this shows somebody who owes $15,000 in Social Security and Medicare tax. So if you were an employee, you would be paying in $7,500, and then your employer would be matching and paying the other $7,500. As we just discussed, when you're self-employed, you have to pay the whole enchilada, the whole 15K is totally your responsibility. So here is how the income works. Oops, sorry, I went too far. Works for your business. And this really applies to businesses that are being taxed as a sole proprietorship or a single member LLC. So you have your gross revenue, which is the money that your business earns for your services or your goods, minus any deductions, you arrive at your net income. So if it's positive, it's a profit. If it's negative, it's a loss. That profit or loss then carries through to you as the business owner's individual tax return. Your business profits are subject to 15.3% self-employment tax and also subject to income tax ranging from 0 to 37%. So it takes into consideration the profits from your business and any other income. So say your business is your side hustle and you also have a W-2 job. That is also going to be taken into consideration when we're arriving at your tax bracket. So you get to subtract your standard deduction or itemized deduction and any personal adjustments. And that is the tax that you pay on your business profit. So in terms of estimated taxes, generally speaking, who should pay estimated taxes? Basically, anyone who thinks that they would owe $1,000 or more in tax, which is usually anyone who is a sole proprietor or self-employed. It is very easy to owe $1,000 per year in tax. So it's generally going to apply to independent contractors, people who have their own businesses, sole proprietors, people who have an entity or own a share in an LLC. And the basics of estimated taxes are the IRS wants taxes to be pay as you go, so you don't owe. So just like with W-2 individuals who just receive a paycheck from their employer throughout the year and have withholdings, we're paying taxes as we go. And the IRS wants that to be the same for self-employed individuals. They don't want everyone just waiting until tax time to pay their taxes. So either through withholding, like a W-2 individual would have, or estimated tax payments like a self-employed individual would have. Again, you must make those payments if you expect to owe more than $1,000 in taxes for the year. And if you don't pay enough tax through withholding and estimated tax payments, you may be charged a penalty. So there's a couple different penalties associated with estimated tax payments. There is a failure to file penalty if you don't file at all. There's late payment penalties if you file late, and there's underpayment penalties if you do not pay enough. So it is something that is important to kind of get a good grasp on and make sure that you are making these payments if you can. And this just goes into explain that even if you are due a refund when you file your return, you may still be charged a penalty if you don't make the estimated tax payments on time. And those payments are due on a quarterly basis every year, April 15th, June 15th, September 15th, and January 15th of the next year. So, estimated tax safe harbor rules, basically, how do I know how much to pay? Safe harbor just means that you pay the lesser of two scenarios. So you can do 90% of the current year's taxes. So this year, if you estimate that you're going to owe $1,000 in taxes, for example, you would take that $1,000, multiply that by 90%, and you arrive at $900. And then you divide that 900 by 4, which you get $225, which is what you pay as your estimated taxes each quarter. Alternatively, you could do 100% of last year's taxes. So if you owed $2,000 in taxes last year, the calculation would be taking that $2,000 and again, dividing that by 4 for the 4 quarterly payments. And then, of course, you come to $500, which is what you would pay in estimated taxes each quarter. But because the 90% of current year's taxes comes out to be a lesser amount, the $225 is what you would pay in. So they do let you choose the lesser of either option. You can also estimate taxes based on actual income and deductions. So how you would do this is you would estimate your AGI, which is your adjusted gross income. So that's all your income that comes in minus certain adjustments, such as like your business expenses. And then you want to take taxes into account. So you're going to multiply your estimated AGI by your applicable tax rates. So it's your AGI times your taxes equals your estimated tax payment for the year. And then again, you're just going to divide that number by 4 to determine the amount that you should be paying each quarter to the IRS. So, and I know that it can sound a little bit complicated. And that is one of the services that we offer at Collective, is helping you determine what you should be paying in each quarter. And we'll talk more about that in just a little bit. So I mentioned S Corps in the beginning. I let you know that we're obsessed with them at Collective, but why? What are they? First, let's just talk about legal structures really quickly, because we need to kind of have an understanding of that before we talk about tax statuses. So a legal structure would be an entity that is formed in a state with the Secretary of State. So you want to think like an LLC or a corporation. A legal structure is required to file an annual report that just lets the state know who manages the entity. The formation of the entity and informational returns, such as the annual report, are done with the Secretary of the State. And oftentimes that is a completely different entity than the taxing authority with the state as well, by the way. So they don't make it easy. So what is the advantage of being an S Corp? What do taxes look like? So when you're an S Corp, keep in mind that it can be a more efficient tax structure for you when you're self-employed, because S Corp owners don't pay self-employment tax on the business profit. So an S Corp election, which is a tax status, creates an employee-employer relationship between you and your business. You're required to pay yourself a reasonable salary through payroll, and that salary is an expense. Your employee wages that you would get via payroll from your business are subject to payroll tax, which is 15.3%, just like self-employment tax. They are the exact same thing, just with a different name. Half of the payroll taxes are withheld from your paycheck, and half are an expense for the S Corp. So again, we looked at this chart, this representation of how a sole proprietor or an LLC single member is taxed. So remember, we have the gross revenue minus deductions equals the net income. Positive is profit, negative is loss. That profit or loss flows through to your personal return. You pay self-employment tax on 100% of the business profit, and then you pay income tax at your ordinary income tax rate on the business profit as well. With an S Corp, you're still going to have obviously your revenue, the money that your business makes and brings in from offering your goods and services, minus your salary, minus your payroll taxes of 15.3%. Again, the salary is an expense for your business. And then you minus your business expenses as well. We arrive at the profit or loss. That profit or loss passes through to your individual tax return, and then you just pay income tax on the business profit. So again, income tax is still calculated in the same way. All total household income minus personal adjustments minus standard deductions or itemized deductions. So let me take a swig of water real quick. And then we can go over this scenario. So the middle left column shows the business that is being taxed as a sole proprietorship or single member LLC. And then the middle right column is the same business if it were to be taxed as an S Corp. So both businesses, their profit pre-owner wages. So before any payroll or anything, just their gross revenue minus their business expenses is $160,000 for both businesses. The difference is coming into play here with the wages. So the sole proprietor or single member LLC is just not set up to pay themselves a reasonable salary and yield any tax savings. So they're having to pay the 15.3% in self-employment tax on their entire net profit of $160K. Whereas the S Corp owner only has to pay this 15.3% on their reasonable salary now. So they set themselves a reasonable salary of $60K. That's all that they're responsible for, paying the 15.3% on. So instead of paying $24K like the sole proprietor is, they're now paying $9K. So they're saving $15,000 just by switching to an S Corp. When I don't know about you, but I can think of a lot better things to do with $15,000 than to keep paying it in taxes. That's a really nice vacation. So moving along, as you can see, the pass-through profit for the sole proprietor is the entire $160,000 in net income from the business, whereas with the S Corp, 100% is passed through. And remember, $60K is W-2 wages. The taxable personal income is still $160K for both businesses. So doesn't change income tax, but it does help mitigate some of the self-employment tax burden. So we talked some about reasonable compensation. How exactly does getting a salary through an S Corp work? Like, how much do I pay myself? How does it work? So unfortunately, there is no set standard for reasonable compensation. It is purely a facts and circumstances argument. So I always advise everyone that even if you don't go with collective, please have your reasonable compensation calculated by a tax professional. It is a gray area. The IRS has not given us an exact formula for reasonable compensation, and they've been arguing about it in court since the 1940s. So there are a lot of moving parts involved with calculating reasonable compensation, and a tax professional can help. So your salary is a tax strategy with an S Corp. What you mainly want to do is you want to get it in the sweet spot. So we want to strike a balance between having, good defensibility with the IRS, being in compliance with their rules, but also setting you up to have optimal tax savings and be able to maximize your take-home pay. So again, that's a part of our service that we help calculate. We help get you in that sweet spot. And of course, if you have additional goals, maybe you are trying to purchase a home in the next couple years, this is also a wonderful strategy for looking more favorable for lending purposes, because having that W-2 showing is really helpful when you are trying to obtain lending. So if you do have a certain goal in mind, you can always set your salary higher than what we would advise. But you can talk to our tax pros about that. So, is an S Corp right for you? As a business owner, you're constantly thinking about what is best for your business. If you are new to business, like this is a very, very new venture for you, either you haven't started yet or you have very few earnings, not a lot of clients or contracts lined up, then either being a sole proprietor or an LLC may be best for you until you are getting your income to a level where you're at about 60K per year in net profit at a minimum. If you do also just want a really simple, super straightforward tax structure, you don't want to have to deal with payroll, etc., then a sole proprietor or LLC may be right for you as well. An S Corp is going to be best if you are earning more than 60K in profit. For individuals who really want to maximize their retirement savings, it's also a great strategy. You have more flexibility as an S Corp in terms of retirement contributions due to the employee-employer relationship that the S Corp election creates. And you also want to make sure that you have enough cash flow to make regular payroll runs. So getting started with an S Corp, it's not that hard, y'all. We got you. How do we set it up? So at Collective, we try to be a one-stop shop for you and have a comprehensive suite of services that does include LLC/S Corp formation. So if you're coming to us as a sole proprietor, we would start by filing the LLC for you in your state with the Secretary of State. And then we also get your articles of organization. We set up the LLC operating agreement and do all other compliance and administrative work, like getting your EIN, filing the S Corp election, and then getting you registered as an employer, just so you can go on payroll to satisfy that requirement. We also provide you with setup tools such as the bookkeeping and payroll software. And we set up your money flows, like your business bank account, business credit card. We link those to our software, and we would change any expenses and customers over. We can provide guidance on that. If you are being paid, as a sole proprietor, you would want to switch those over to be paid as your LLC. Now, in terms of ongoing business operations, there's going to be an additional filing that you need. So as an S Corp, you not only file your individual tax returns, federal and state, but you also have to file a separate business tax return. You also have to file quarterly payroll returns. So there is some additional administrative work there. To maintain the entity, you do need to file state paperwork. Like we talked about, that annual report that's due every year. And most states do charge an annual fee as well. And then you need to make sure that you're keeping up your books and your tax obligations. So you need to maintain your books on a monthly basis. You want to make sure that everything is clean and up to date. And you need to make sure that you're paying estimated taxes quarterly on the federal and state level. So who can backdate an S Corp? If you are already an LLC, we can make your S Corp retroactive to January 1st, as long as your LLC formation date is before or on that date. And how does that work? How do we backdate it for the beginning of the year? What all is entailed in that would be filing the backdated S Corp election with the IRS. And then we would present a late election reasonable cause argument to them. If you need an EIN, we can get that. But in most cases, if you already have an LLC, you likely have an EIN. But just in case, we also, like I mentioned previously, would register you for your payroll account. We would get you caught up on payroll, and we would clean up your bookkeeping. So we would reconcile and categorize your books, get everything organized back to January 1st, include any business expenses. We create your balance sheet, and then we would reclassify that business income as W-2 wages and distributions when we run the back payroll, just so that way you can enjoy the benefits of having an S Corp all year instead of just part of the year, because it would likely result in higher savings. So backdating an S Corp can lower taxes you've already paid. You pay a larger amount of self-employment taxes when you're just an LLC. We went over that towards the beginning of the call, where we talked about that 15.3% in self-employment taxes and how you pay that on 100% of your profit when you're just an LLC versus just on your reasonable salary when you're an S Corp. If you've already paid estimated taxes for the first and second quarter as an LLC, backdating an S Corp election will lower those tax bills retroactively. So basically, if you've already paid in too much in estimated taxes, you'll get a refund at the end of the year. When should you backdate an S Corp? So now, now is the perfect time. So March 31st is the deadline to join Collective and still have your S Corp backdated for 2024. Honestly, we do encourage people, if you can, and you think that Collective sounds like a fit for you, to sign up before then. And the reason for that is that the IRS gives 75 days from the start of the year to decide if you want to be taxed as an S Corp for that year. So if we file the S Corp election by March 15th, then it is considered a timely filed S Corp election. If we wait until the end of March, then we have to apply for what's called late election relief, which is okay, but it's just a little bit more entailed. We have to give a reason as to why you didn't timely file. And I've never seen the IRS not accept a timely filed S Corp election. So just a couple things to consider. But either way, now is a perfect time to join. So are you thinking about switching to an S Corp? Let us know. Okay. So what it's like out there on your own without Collective, you are just like happily running your business. And again, you've got all these little bubbles where you want to be an S Corp because you want the tax savings, but maybe you just really like doing all the administrative stuff yourself, or you're just apprehensive to kind of like give up control over your business because it feels like it's just been so personal this whole time. Collective just makes it easy. We are one platform experience. All of your information is in one place, communicating with each other. So you have your bookkeeping in the same platform where your business taxes are going to be done, where we're calculating your quarterly estimates, where we're running your payroll, where we are sending you compliance reminders for everything. And you have access to our team of small business experts who are tax professionals that are experts in S Corps. So it's just a very cohesive one-stop shop experience that can really help you with your peace of mind. So, everything that you are considering with Collective, it's all in one place. We are available nationwide, and we work with sole proprietors, single member LLCs, LLCs who are already filing as S Corps, and if you have 60K or more in self-employment profits. Now, what to expect your first year at Collective would be LLC and S Corp formation. So again, we pick up wherever we need to in the process by either forming the LLC or filing the S Corp election, getting the EIN. You can talk to us about retirement plans and health insurance. We also offer guidance throughout the year on reasonable compensation. We help you set up your bookkeeping and payroll tools, register you as an employer, and you get a training call with one of our onboarding accountants. They walk you through how everything works. For ongoing back office support, we do bookkeeping for you on a monthly cadence. It is S Corp specific accounting, where you do get an accountable plan as well, which is an amazing perk of an S Corp. It's an employee reimbursement plan, and we help you set that up and manage that. We provide guidance on reasonable compensation and adjustments, compliance reminders to file important state paperwork, and you have your personal financial team you can message with questions or for advice. So you'll get assigned your own member relationship manager, and they're your account manager, and you can message them at any point, set up calls with them. They are there to support and assist you. And then for taxes, we prepare the tax return for the S Corp. There's its own separate form that's due every March. It's Form 1120S. We prepare and submit that for you, and we send you estimated tax calculations and reminders. And in terms of our pricing, we have two options for you. Both plans include everything that we just went over. So we have a monthly plan, which is $349 per month. And that is just a at-will subscription. So there's no type of contract. Or you can pay on an annual basis. You do save 15%. So the annual fee, if you go with that plan, it shaves off about $630. And we have a one-time onboarding fee of $199. Again, this is fully inclusive of everything we talked about with the bookkeeping, the payroll, and we are 100% deductible for you. So if you guys are interested and you want to learn more, you can schedule a call with one of our tax advisors, so somebody on my team, and talk about maybe getting signed up for our services. If it sounds like a good fit, you can use this QR code, and we have a discount code for you where you can get your first month at 50% off. So take a screenshot or write down this code. It's Feb28 W24. So just give that to our lovely tax advisors during our call, and we'll get you set up at a great price. All right, now it's time for the Q&As. I'm going to leave this screen up in case you guys want to scan that QR code to schedule a call with my team. But let me take a look at what we got here. So just as a reminder, any questions you have, go ahead and type them in here. Oh, Sarah, did you want to do, I think we're going to do the giveaway of the Amazon card before the Q&A. So while Sarah is getting that ready, you guys can type in any questions that you have. Okay, so we have a winner. Is Rhonda El here? Yes, Terry, no problem. We'll send you out a recording. Oh, I see we have a lot of questions in the chat too. That's okay. I'll try to get to these as well. Okay, wonderful, Eric. Yes, please schedule a call with us. We'd be super excited to talk to you. Okay, so let's get to the Q&As. I'll circle back to the questions in chat in just a couple minutes here. So we have a question. Taxes are paid the following year. Yes, with an S Corp, it's the same way. Taxes, so for 2024, if you're operating as an S Corp this year, you would pay taxes next year. We'd file your S Corp return in March. It's just an informational return, so you wouldn't have to pay any corporate income tax on that. And then you would just get a W-2 and a K-1 from the business to file your personal taxes with in April. Okay. Do you have to use a payroll app or program to pay yourself, or can you just claim what your salary is at the end of the year? So, you can do that, but it gets more complicated because of calculating the withholdings. So it would be a bit more work for you. I never recommend doing manual payroll. It's very easy to make mistakes. It is an option, but it's not recommended, especially with payroll being as affordable and as accessible as it is now. So apps like QuickBooks have payroll that you can use, or Gusto, who we partner with. They are a wonderful payroll provider. And I believe they're about $40 a month. So it's extremely affordable and it's just less of a headache and a better use of your time to not have to do manual. Okay. Are you stating it's best to start with an LLC and transition to an S Corp? Yes, great question. So an S Corp is just a tax election. So it's just a tax status. It only exists in the tax realm. So it does have to be anchored to a legal entity such as an LLC or a corporation, but we do exclusively work with single member LLC based S Corps at Collective. Can an S Corp be backdated to January 1st of 2023 in order to apply this structure for 2023 taxes? So Rosa, that is possible. You may be able to find an accountant who would do that for you, but you would want to move quickly on that, because if you are going to be backdating to January 1st of 2023, that means you're going to have a requirement to file the S Corp tax return for 2023, which is due on March 15th. So that's due in about 2 weeks here. So you would want to find a CPA who would be willing to do that for you. They would probably have to file an extension for you for the business. And because you would have to file an extension for the business, you would have to file an extension for your personal as well, because we need the information from the business return to prepare the personal return accurately. So if you already have filed your personal return, you would have to get that amended. It it could be also a situation where an accountant would charge you a lot of money to backdate that. So you would also want to kind of calculate to do a cost versus benefit analysis. How much are they going to charge me versus how much would I see in tax savings? Because it is a large administrative burden to do a retroactive S Corp election, especially that far back. Can we backdate to 2023 or only this year? Yeah, Myrna, just kind of like I was talking about, collective wouldn't go back further than January 1st of 2024, but you may be able to find a CPA who would do that for you. It likely is going to be costly though. Glennis said, I met with an accountant who shared that you can backdate up to 3 years. Can collective help backdate that far or only back to January? Yes. So you do have the flexibility there. But collective, we do have internal deadlines on how far back we'll go just because it is a very large administrative burden. We would have to do major book rebuilds, and also payroll catch-ups. And at our price point, it just isn't feasible for us to do that at this point. But yeah, you can definitely chat with a local CPA. A lot of times they will charge you a pretty hefty retainer, especially if you're going back several years, but it may be worth it for you in terms of savings. You would just want to get with them, have them run an analysis for you on how much you could potentially save versus how much they would charge. Excuse me, is it possible to change from S Corp to LLC if I have losses in the business? Yes. So you would just revoke your S Corp election and then your business would return to being taxed as a single member LLC. You just want to keep in mind that you won't be able to re-S elect that particular entity for 5 years. So they don't want you like flip-flopping back and forth, going back and forth between LLC and S Corp. So if you did revoke that, you'd have a 5-year waiting period before you could be an S Corp again. What is the due date for the S Corp election? If it is already late, can it be filed anytime during the year? So the due date is March 15th. It is best to timely file it by that date, but we can file it at certain points throughout the year. Again, collective has certain internal deadlines, but we would have to apply for what's called late election relief, which is just a little bit more, it entails a little bit more administrative work, but it can be done. Okay. Rashidi asked, what if we want to start an S Corp but no LLC yet? Do you help with that? Yes, we can help you form your LLC and get it set up and then do the S Corp election. What website can be used to pay estimated taxes? Laura, you can go directly on irs.gov. There's a little button that says pay, and you can go right there and pay. Or there's the EFTPS website where you create an account to pay your estimated federal taxes. There's also one that I've used in the past because sometimes those federal government websites have, if you had like an issue in the past with a tax return not being accepted, sometimes they won't let you create an account. So there's also a website that is very good and secure called pay1040.com. So you have a couple different options there. Okay. Does the monthly fee cover setting up different LLCs if I have 2 different businesses? And do you file the yearly required documents for LLC or S Corp? So the monthly fee would be per business. So you would need to have different accounts if you had separate businesses, because the bookkeeping, accounting, payroll, and tax would all need to be completely separate for each business. We do file the yearly required documents for the S Corp, like the tax return. We send you reminders of the annual report that you need to file, and you just would log in and file that. And explain the S Corp employee compensation plan. So, do you mean like if you start an S Corp, you become an employee of that S Corp, you get paid a W-2 wage that we would calculate for you, and then you take the remaining business profit as distributions. So the distributions are just taxed your ordinary income tax rate. Sharon asks, what is involved in payroll and bookkeeping? So the payroll is pretty simple. It's just automated payroll. Like I mentioned, we partner with Gusto and they are extremely user-friendly. They are fully integrated into our platform. So it is still a one platform experience. You don't have to go to a third-party website. Now, it typically runs once a month, but if you need to make changes to the payroll, you can always skip a month and catch up later or put it on pause if need be. And bookkeeping would be done by our team. So they will connect your business bank accounts to our bookkeeping platform, and they'll categorize and reconcile your accounts each month. You just upload your bank statements and we take care of the rest. How do we pay ourselves in an S Corp if the business did not make money? So that's a good question, Sudeep. So if your business is not profitable, then it wouldn't be a great decision to start an S Corp yet. You would want to wait until you're earning more than $60,000 net per year from your business. If you already are an S Corp and you're operating at a loss, then you don't have to pay yourself. Myrna asked, are there specific businesses that you specialize in? So we work a lot with consultants, creatives, such as designers, photographers, marketing, a lot of individuals in marketing, a lot of real estate agents. We kind of run the gamut. Our members have all kinds of businesses. So we mainly just specialize in small business and in S Corps. Do you work with new businesses set up with W-2 income? I'm not sure what you mean. Do you mean that you have W-2 employees? If you could give me just a little more information on that, Mohika, that would be great. Do you offer any type of anonymity strategies and or tax avoidance techniques? No, we don't, Marcus. We are very focused on compliance. So we don't, we're not really super aggressive tax strategists at Collective. We tend to be a little bit more on the conservative side in favor of compliance. If an LLC has non-owner employees, should we register for payroll? Yeah, I mean, if you have employees that you are having to run payroll for, then signing up with a payroll provider such as Gusto could probably make your life a lot easier. And Nadia asked any cons we should know about with the S Corp. Just that it's a little bit more of a complex business structure, Nadia, all the things that we discussed. So you need a little bit more robust bookkeeping with an S Corp. There's the extra tax return that has to be prepared and filed every year. And also there's that payroll requirement. So a couple more moving parts. That's the only negative. Sudeep asks, once you start an S Corp, And if I realize I want to go back to an LLC, is that possible? Yes, you would just revoke that S Corp election, but you can't go back to being an S Corp with that entity for 5 years. What is your cost for LLCs that are not S Corp? So we only work with S Corps. So if you are looking to just get an LLC filed and set up, you could just Google like formation, like any of those websites like Zen Business, Inc. File, any of those would be fine to set up your LLC. In terms of like monthly bookkeeping support and taxes, we just work with S Corps. If my business is not active anymore, can I continue to keep the LLC S Corp alive, or does it expire? Yeah, you can keep it alive as long as you're paying your state fee every year, you're filing an annual report, and then you're filing an S Corp report, even if it's just a zero return, just letting them know that your business is alive, even if it's not active. If you go back to 2023, is it possible to file an extension for an S Corp if the IRS hasn't accepted the S election yet? So your accountant would likely, what they would do, so you would still want to file the extension. And what your accountant would likely do is when they file the S Corp tax return for 2023, when they file that 1120S, they would likely just file the S Corp election form 2553 with it and send them in at the same time. If you've already filed the 2553, you're just waiting to hear back. Yeah, you can still just request an extension. Should the S Corp election be done every year separately? Can we skip any year in between to tax as LLC? So the S Corp election is just done once, and then it's just kind of perpetually in place. They don't want you switching back and forth from LLC to S Corp. So if you do revoke the S Corp election, then you can't re-select that entity for 5 years. Can you pay your grown university children to help lower your tax burden? Since we are giving them money anyway to live, they do assist me. So if they are of legal age to work, and you can prove that they are actually doing work for the business, then sure, absolutely. But you do have to prove that you are paying them an amount that you would pay anybody else if they were working for you. So you can't, if they do an hour of work, you can't pay them like an insane amount for that. It has to be like a market rate for what you would pay for those services. And you have to be able to prove the work that they did and the hours that they worked. If they are, of a close relation to you, the IRS does look into that a little bit more than they would if it was, it's called a non-arm's length transaction. So it's just something they pay attention to. So you want to make sure that you're documenting everything to prove the work is being legitimately done. So what if I elect S Corp, but the business doesn't make more than 60K in revenue? So in that instance, Sharon, you just wouldn't see any tax savings likely. Nothing bad is going to happen. There's not going to be any penalties. You're not going to go to tax jail or anything. You just likely wouldn't see a tax savings below that amount. When you have multiple business focuses like YouTube and real estate, do you need separate entities? In most cases, yes. If the two are really completely unrelated revenue streams, it is best to separate them into two separate entities. The IRS uses different business activity codes. They're called NAICS codes. So you would want to see first if you could find a code that encompassed both revenue streams. But if not, then you would want to form the businesses according to the NAICS. And this just helps the IRS identify what kind of business your business is conducting and see if your expenses are congruent with industry standards. So if you form a YouTube channel, but then you have real estate agent, for example, expenses, they could say, well, that's not congruent with industry standards, so we're going to disallow these expenses, which would not be ideal. So it's best to just keep it separated when in doubt. Rashidi said, I apologize. So the business has to start as an LLC before turning to an S Corp. Is there a waiting period? Just want to double confirm. So yes, we start the business as an LLC. So that way the S Corp election can anchor on to that legal entity, and that LLC can be taxed as an S Corp, because an S Corp is not a legal entity. So it's just a tax status. So you can't go from, being a sole proprietor to being taxed as an S Corp. There has to be that step in between of forming a legal entity. There is a very small waiting period of when we file the paperwork with the state to when we get the articles of organization back, typically a week to 2 weeks. Is there a limit to how many single member LLCs I may have? In terms of with collective, yes, per account, it's one single member LLC. Do you create W-2s? Yes, we will give you your W-2 and your K-1 to file your personal taxes. Is your bookkeeping platform QuickBooks? No, we have our own proprietary bookkeeping platform. It's called Collective Accounting. If you do end up scheduling a call with one of our advisors, they can send you some demos of our bookkeeping platform if you're interested. Okay. Can you please share what would happen if you make less than 60K 1 year, or if you don't make a profit? What happens if you still file as an S Corp in this situation? Yeah. So again, you just wouldn't see a tax savings. Nothing terrible is going to happen. You're not going to be penalized. The 60K threshold is a collective recommendation. It's not an IRS requirement. We set that threshold in place because we want our members to come out ahead, saving more than they're spending on support services. So, in the event that you're lower than 60K, you just likely wouldn't see a tax savings. Which bookkeeping platform does Collective use? We use Collective Accounting. Again, is a proprietary software. If we want to just get an LLC only, can we do that for a fee, or do we need to pay a membership fee? So we do only work with S Corp. So our entity formation for LLCs is just kind of like a means to an end for the S Corp. So we don't set up just LLCs, but you could go to LegalZoom, Inc. Files, and Business, any of those, and they can help. Yes, you would have a personal W-2 with your S Corp. Is that what you mean, Mohiga? Or you mean that you have a W-2 outside of your business? So you have a full-time W-2 job, and then you have your business. If you could clarify that, that would be great. How does it work when the employee is not living in the US / remote non-US workers? So Sharon, if you're living in the US as a business owner, then that is fine for us. If you have like international contractors, that's okay too. We can work with that, no problem. Eliza asked how an S Corp helps with retirement savings. So you just have a bit more flexibility because you can contribute both as an employee and as an employer when you have an S Corp. So certain plans like a solo 401k, you have just more flexibility in your contribution limits, especially with that reasonable salary. What should you do if you've not kept up with renewing your sole proprietorship? Just start filing again. So, do you mean like a single member LLC, or did you have a DBA for a sole proprietorship with the state? Either way, if you haven't kept up, then you would just contact the state and they would let you know what documents you need to submit and if you need to remit any filing fees that are past due. Does the monthly cost cover the cost of S Corp filing? What if I set up the S Corp myself and then join collective? Yeah, so we don't charge for filing the S Corp. It is all just covered between our monthly fee and our onboarding fee of $199. You can set up the S Corp yourself and join collective. That's totally fine. But typically, if you do that through one of those websites that I've mentioned a couple times, like Zen Business or LegalZoom, it's going to be a lot more expensive than what collective will charge just to form the LLC and S Corp. It's a much more affordable option to just go with collective from the get-go. If your data is proprietary, what happens when you stop using your services? How do we access the data for historical purposes? So great question, Myrna. So basically, if you were to stop using our services, obviously we don't want that, but if that were to happen, we would make sure that you had your CSV file for your bookkeeping, and then you could just migrate that over to whatever new system you use. And in terms of the payroll account, you can just take over the billing for that. So we make sure that it's an easy transition for you either way. Yes. Okay. So if you have additional W-2 income outside of your business, it can have a material impact on the potential savings with an S Corp because of the Social Security cap. So if your W-2 job is a high earning position where you're earning more than $168,600 per year, then an S Corp likely wouldn't make sense, and you'd be better off just sticking with an LLC or a sole proprietorship. All right. If you have a full-time job and a part-time job, assuming both jobs are related, can you collect your full-time income through your business, or do you have to use your social security number? Essentially, is there a way to get tax benefits working for someone else? So yeah, you can potentially do that. You would basically just have to talk to your employer and see if they would switch you to being paid as a contractor instead of as a W-2 employee. But keep in mind that may have an impact on like healthcare or certain benefits that you get through your employer. But we do see that often where people have, worked at a company for a certain number of years and they're kind of wanting to spread their wings on their own. So their W-2 job just becomes a business endeavor, but that would be up to your employer. Okay. Sorry, my previous question was because I have remote international workers. Will they be on payroll or are they 1099? Yeah, so those would be, Sharon, those would be just expenses for contractors, for international contractors. You wouldn't need to put them on payroll. You would be the only one needed to go on payroll. So if you're paying them as contractors right now, not paying part of their income tax or, their taxes, that would just remain the same. Same industry like fashion, entertainment. Yeah, so we have, like I said, our members just run the gamut. We have people in all industries. So, yeah, we do have people in fashion industry, entertainment, media, you name it, we got it. Okay, I think that's all the questions in the Q&A. I'm just going to pop back through the chat real quick and see if there's anything. Do you help in creating? Yes. Okay. What happened if you don't pay estimated tax throughout the year? And are we paying this only to the state or both the feds? So if you don't pay estimated taxes throughout the year, you'll get dinged with some penalties. Generally speaking, you do have to pay Excuse me, federal and state. Okay. Will we receive a recording? Yes. Let's see what else. Excuse me. Is the annual report a state requirement for all states? No, not all states, just some. Okay, guys, I think that's it. Thank you so much for attending the presentation. We'll send out a replay. Have a great day.